You alright, guys? Bear with us, and then we can get started. Let me just get these links out to the group. Welcome, welcome, welcome. Right, we'll get started anyway. This is going to be recorded on the YouTube channel, so anyone that watches can just skip back. So, yeah, let's go from top to bottom. Let's have a little look at what's happening. In terms of what we got last night, obviously, as you can clearly see, we got a little bit of a rebound yesterday. Prices are still looking relatively weak, but it does potentially look like we might see a little bit of kind of prices developing a little bit higher over the course of today, and then come back down. The dollar obviously opened up much weaker. It's obviously searching for liquidity lower down. So yeah, we're going to have to keep an eye on this, as it's going to put a little bit of strength on crypto and equities, especially after kind of the attempt to really push down lower yesterday. So we'll see how things kind of play out. In terms of our shorts, what we are going to do, I mean, we did have relatively tight stops on it. We're going to widen the stops and then just add some margin. Yeah, probably just looking to hold for the next move down. Again, I mean, things are still looking very weak even after this push. Very relatively weak buy side on the move up. So yeah, I don't see it really pushing a hell of a lot more. Still, yeah, just still looking very, very bearish right now. Let me have a little look. Yeah, I mean, we just didn't quite touch this bottom here, so it does look like we're probably going to see another move back down. I wouldn't get too worried in terms of being short in this market. But yeah, I mean, we're already starting to hit resistance, weaker buy side, so there isn't really going to be too much left in it. At this liquidity zone where it's heavily rejected a few times actually. So yeah, it might look like push up towards 16,950. There's quite a lot of liquidity at this level here, so I don't see it pushing past that level. So yeah, push, maybe hold here, and then make another move to the downside there. That's what things are looking likely to be. Yeah, so we'll see how things kind of play out. There are going to be some nice trades. We're already coming to support, so as long as we manage to hold this liquidity zone down here, we'll be fine. Came down heavily, rejected that level, so probably looking like prices coming down. I'll hold this level of liquidity and start rebounding again. The bearish structure was here, so you got triple top, broke out. So we'll see how things kind of react at this level. But yeah, there isn't a whole load of room for it to move down and into, and I don't see Bitcoin making a move all the way back up. Yeah, there just isn't enough volume. There's a little bit of accumulated volume there, as you can see, on this way back up. But I mean, yeah, there's supply already coming in at these levels, and already buyers are weakening on this continuation, moving up. So yeah, we'll be moving down relatively soon. So yeah, could look at some potential very quick buys. But apart from that, I mean, markets are going to turn right around very fast, especially after this last move that we got last night or last evening. Yeah, we're looking like we're going to come back down. But at least in the short term, at least for today, potentially see just a little bit more of a trickle up. let the sellers gain some more liquidity for a much larger move in the market. But yeah, the market is just looking extremely weak, especially around here. Obviously, we got a bit of structure, it broke out, and then it went for seconds. So, yeah. This is obviously a nice bounce in terms of looking at price action. It's quite positive. But you're just not really getting that volume. Now, if volume does decide to come in on the follow through and we start picking up on buy side volume, then that starts to look like it's going to be a little bit more sustained. Then we'll be looking obviously at price action in terms of kind of seeing these wicks and supply being dumped at levels of resistance for a continuation back down to the downside. But I mean, yeah, guys, for now it's still looking like we're going to turn back around. Just found a bit of support, that's it really. And obviously the dollar index is making a move, but we came very, very close to this order block here, kind of previous structure at 16.2. And yeah, found a bit of support, now moving back up, but there's just simply too much resistance. Shark in the house, how you doing, my man, UK? So yeah. Still within the range, still making our move down, so we still need to come down and test these levels down here before even making that push back up. Obviously, we kind of just got into the mid-range where there's a bit of volume concentration from previous price action. But yeah, we're going to make a break back down. It shouldn't be too long, so if anything, it gives you better entries to go short. So instead of just making that huge move back down. Again, there's a huge amount of orders back here from this previous price action, so I wouldn't be surprised if we maybe get to about the 382 and then start reversing. Yeah, it is for the Fibonacci retracement, mate. Yeah. So we've got an extension to look at. Obviously, future price targets lower down, and then yeah, we use the fib retracement obviously to see how kind of what levels we could be looking at in terms of a rebound in the market. So if we get this up. So, I mean, there's a decent amount of resistance at this 382. A whole load of previous price action, a lot of orders at that level. So, yeah, probably looking at that. Still, I mean, just look at that. It's still extremely weak. I mean, we've still got a full day to go, but I mean, just very, very weak buy side. You're only starting to see buy side really come in on the lower time frame. On that rebound, bit of accumulated buy. Yeah, we just need to see that dollar to start making a move back up. As you can see, so see how things kind of play out. If we start breaking through, this is your last kind of level of support. There's quite a lot of liquidity at that level, so if it does decide to break and make a move down into this box, then yeah, we'll be looking at a much stronger reaction. At the moment, a lot of liquidity has been soaked up at this level, as you can see, 1, 2, 3 times, and it's coming down for a fourth. So yeah, it might be the case that we very briefly breach underneath, or we make a move back down. But yeah, I wouldn't be majorly worried about a huge pump in the market. I don't see it. We've had our bear market rally twice already. Things are obviously not looking very great. A lot of supply got dumped. A lot more supply got dumped than demand that's coming in. So yeah, I mean, sellers are still very much in it to win it. It's just going to be a brief push back up in prices. Simple as that. Yeah, I wouldn't even want to get on the rebound. The time for a rebound was yesterday. Maybe if we kind of get a little bit of a pullback, things still look strong and we can get in on the move up. What EMA are using? It's not EMA, it's a simple moving average, but 100 and 200. I do normally have the 50, but I mean, if you want to use exponentials, you can use exponentials. There's an indicator that literally just sets it all up for you. But yeah, this is one that I use, EMA. This one here you can use, just turn off 20. I'll just have 50, 100, 200. Or if you want, just have the longer term ones at 100 and 200. Some people use 220. But yeah, we keep it simple. So 100, 200 is what we mainly use. And then we might flick on the 50. But I mean, obviously the 50 doesn't hold too much strength. So yeah, we just have the 100, 200. It's good enough. A lot of the time, prices just go to the 100 and 200 and see a bit more of a stronger reaction. So yeah, you just kind of have what works. But again, you can use exponential. You can try it. Just just whack on the exponential moving averages, and then just look at previous price action. See whether it works for whatever you're in. How many times it's kind of rejecting or seeing a large reaction on breaking out from those moving averages, and just compare them with one another, and then yeah, use what you see fits best. One thing we should look at. Yeah, I mean, it's just following structure, really. It really is. I can get rid of that. See, the Toe Crypto market chat literally bounced off quite very, very nicely off that zone. But I mean, there's just so much resistance. So yeah, I just really don't see this moving a hell of a lot higher. Yeah. Yeah, this is basically where we're at, really. Just testing and holding this level of resistance. I mean, Toe Crypto market chart's clearly a lot more advanced than Bitcoin, for instance. We're basically about to break through this low here. So yeah, I mean, very brief push, and then we're slamming through this zone. Once we break through that zone, we're coming down. So it's just setting up. Yeah, it's going to be a very red December by the looks of it. And by the looks of it as well, I mean, on the higher time frame, this is where the next level of support is at 560 billion. So that's a lot of money lost and gone out in terms of value. So yeah, this is fully setting up. or that we need to see some sell side volume coming in on the lower time frame, just because we're not really getting much. But again, markets can move on very low volume, so it kind of sets up perfectly for institutions to come in with some with even low levels of volume themselves, but higher than what we've been getting to really move markets. So, and also, I mean, at this stage of the market cycle, there's a lot of participation that's kind of been leaked out. So very low participation rates, obviously mean low volume, but yeah, this is where markets really move. Just because it's easy to make a move by large amounts. So yeah, be finding resistance sometime soon and making a move back down. Yeah, let's have a little look at equities actually. Yeah, um, just looking very weak, very weak. Tapped into obviously this liquidity zone here. I'm seeing a very slight rebound. But yeah, guys, there. I mean, just look at that. They've basically at their previous lows where they held. But yeah, once we breach through this, you can expect crypto to absolutely crumble with it. S&P still got a little bit more room. Nasdaq's clearly a bit more advanced. But yeah. Russell's looking very weak. Still structure. Yeah, this is coming down. Yeah, the bottom is in sight, that's for sure. Obviously, as you can hear in the background, or maybe you haven't, obviously you can clearly see that the dollar is very weak. Does look like the top's in. So, yeah, the kind of recessionary period's around the corner, and then you're looking at a recovery period. So, this is kind of where things kind of do move relatively fast to the downside, and then start their recovery process by pushing prices back up. So, yeah. Yeah, still looking so weak, man. Tell you what, Lunacy is still looking very weak. Very, very weak. Yeah, man. $6.8 test. Yeah. This looks good. It's continued back down very relatively quickly. Let's have a look.
But I think you should remember the scale here. Unless there is a big change in policy at the Bank of Japan, yields have risen by far, far more in Europe than Japan.
So what does this BOJ move mean for the other big central banks?
Well, I think it just adds to the list of things to worry about slightly, doesn't it? So the asset prices are vulnerable to central bank policy both at home and abroad, and we've just seen an additional risk put on the table with the Bank of Japan.
So the most interesting, I guess, bit in 2023 is again how markets interpret what Fed officials are saying. We could reach peak inflation, or maybe have even reached peak inflation, but be nowhere near the end of hiking.
Yeah, so I think our view is that we probably have reached peak inflation, Fed, Bank of England and the ECB in all three economies. And what we'll see probably is just a bigger emphasis on core, on the labour market, and much less emphasis on the risk posed to inflation expectations from the job market. So I think that's the shift in focus that's going to happen. And we're going to see that kind of different inflation outlooks appear in 2023 based on those domestic circumstances.
But Jamie, what's the most difficult thing for you guys going into 2023? And you've been putting some really fantastic research out. Is it to see the difference in what the markets are thinking and what policymakers are saying? Or is it really more economics, kind of what the housing market does if the labour market crashes?
Yeah, so I think that the housing market is one of the potentially pivotal things for 2023, isn't it? So you've seen globally asset prices have revalued as the interest rate environment has changed. That hasn't really happened yet in housing. And so it's how that plays out. Will it happen fast? Yeah. Will it happen slow? And we've seen in Sweden that we need the unemployment market the job market to house prices. So I think that is to flag that as a major risk.
But do you think we've reached peak inflation across the world?
I think so, cautiously. I mean, it's one of those things that you can say. You can say that 100 times this year and be wrong. But no, I think genuinely, unless there is a big further major shock on the energy markets, then I think we're probably there.
All right, Jamie, thanks so much. Jamie Rush, there, our chief European economist at Bloomberg Economics. Now, Bloomberg Surveillance Early Edition continues in the next hour with Anna Edwards in New York, Danny Berger in London, and this is Bloomberg.
Yeah, we're going to come back down very quickly.
Smart appliances promise to make our homes greener. To protect our planet, Samsung will continue to introduce innovative technologies to help consumers live a sustainable life.
Such weak volume.
On my door, proclaimed himself my ally, and to protect me forevermore. The future was rich and ripe. My partner till the end, an expert, a safety net.
Yeah. Just keep an eye on the dollar index. As soon as it starts to find some support, that's your time to go.
Join Arbor Trade today. The future came to me today and knocked upon my door. Proclaimed himself my ally, and to protect me forevermore. The future was rich and ripe. My partner till the end, an expert, a safety net, a friend. When your trading platform becomes your most powerful ally, wonderful things can happen. Join Arbor Trade today.
Easy, bruv. How's it going? You alright, my man? How you doing? You okay? Yeah, I'm great. Just, yeah, one trying to get the ball rolling. Probably have a bit of, yeah, my eyes need to wake up. But yeah, alright, mate. How are you? How are you? How are you? Good morning. Good morning. Yeah, got a little bit of a rebound. Nothing crazy, in all fairness. It's just a dollar index. Obviously, made a move, broke out of kind of previous structure here. So things kind of started ramping up a little bit on this break, which is cool. Some liquidity here. If we do make a move down, this is kind of your final. I hate it when it does this. This will be your final level of support, somewhere around this region. There's a bit more of a price, or a bit more liquidity concentration, sorry, at this level here. But yeah, that's the area that you're probably looking at if we break through this previous low. But I mean, we've already tapped in a few times. It could be the case this comes down, tests that one time, and then makes a rebound. But yeah, yesterday was good. Some decent moves. Obviously, we moved back down, didn't we? And then we even went for seconds. But yeah, just found support at this level. Bit of sensitivity just above that 16.2 100 level of support, but just very, very weak buy side. Just very weak buy side. Still in relevant terms as well. I mean, it's a little bit of an increase, a little bit of concentration. So what you'll be looking for to indicate that the buyers are taking a little bit more strength is to come down, and then on the retest, seeing another pickup in buy side. But we're looking at potentially seeing prices kind of move to this region, and then potentially tweet and then start coming down again. Might see a little bit of a range. We'll see how things kind of play out, but yeah, doesn't look too strong for a move back up. I mean, we had our bear market rally, and we had our fair share of it. A lot of supply got dumped. You're seeing a hell of a lot of sellers coming in, so things are going to turn back around. I don't see a whole load of opportunities in this market today to go long. So, I mean, majority of that move's been done on that rebound. So, but yeah, we'll have a little look at things anyway. But yeah. It's just everything's still looking weak. So I think the best thing to really do is just kind of let things do their thing, build up some more structure. I mean, buy sides are just extremely weak. Atoms doesn't look too bad. I mean, didn't really make it down. Didn't create a low. So could see a little bit of an extension, but again, I mean, it's basically at resistance again now, so just don't see much in it. Yeah. So it might be the case that you just stay patient. Neither until on some shorts and averaging on some shorts for the larger move, but I just don't see things really pushing up much higher. Just looking very weak.
Struggling to hold, the hard policy mix, the emergency policy mix that's now sort of changed, and we're on the pathway.
That's a no trade, by the way. So don't go in.
Russell Matthews there, a good day for Blue Bay, and he was making those comments on Danny, on your earlier show, I know, with Mark Cudmore. Let's get to Paul Dobson, Bloomberg Executive Editor for Asia Markets, the perfect voice to speak to this morning on this subject. How significant for you, Paul, are these things? The DOJ downplay the significance of this, saying this isn't the start of a tightening cycle, and even some economists saying that this is just a very small move, doesn't necessarily mean that we are seeing any kind of full tightening from the DOJ.
Things just look weak, man. 1 inch, maybe.
I think very significant indeed, both for local markets and
Yeah.
global markets.
It's probably looking okay, but
I think,
don't see a whole load.
DOJ may protest and may say this is all about ensuring that the bond market functions normally, but the market isn't going to hear that at all. The market's takeaway is we know that at some point the DOJ needs to start getting towards normalization.
This is probably a nicer one. That looks a bit nice in terms of price structure, but again, you're not going to be extracting too much. It's going to be very small amount, just because you're going to be hitting resistance very quickly after this move. But yeah, I see shorter term resistance holding rather than longer term. See a turnaround relatively sharpish.
We think that this is, a trend that we can get onto now. Shows you that the market is going to push. I think the DOJ will reiterate that it wants to be patient. I think the Japanese government will also talk about this in very measured, slow, baby steps. A story for the whole of next year. But the market will be impatient. We know that it will push and test up every step of the way now that we've seen that first little hint that the DOJ is ready to relent.
Yeah, Kuroda trying to be very clear, saying that this isn't them abandoning easy policy. Paul, no economist surveyed by Bloomberg thought that this would happen today. We're in this really strange
This looks okay.
run up to holidays. What do you make of the fact that this happened today?
Maybe not.
What do you make of the timing?
Yeah, I think surprise is important when you're making a big shift in monetary policy in a way. If you were to give a signal that it might be coming, the market would take it as read that it was already coming. So why not go there, get out ahead, own that conversation, own the discussion like the DOJ managed to do today. It reminds me very much of when we were covering the Swiss bank way back when it had its cap on sort of the limit on the Swiss franc's appreciation, and it had been telling us up to the week before there was no way that it was possibly going to relent on that, and then it pulled it away. Surprise first thing without policymakers have to make decisions when they've got such a sort of ingrained policy in place. No point in hinting, or the market will take you down anyway. Better to get ahead of the market and announce and own it. And so that's why I think this surprise came. But I think it also has one other benefit, which is that by Kuroda sort of taking the hit, as it were, by saying, okay, we're going to make this move, then when he steps down in April next year and is replaced, it makes it just that little bit easier for the next DOJ governor to come in and think,
Okay.
all right, new shift in policy, maybe we get towards a tightening cycle from here.
Paul, thank you so much. Bloomberg's Paul Dobson. Those with long memories reminding us this is a bit like 1989. from the BOJ. We'll get back to those comparisons later in the program. Let's pivot to US politics. It is now up to the Justice Department to decide whether to prosecute Donald Trump for his role in the January 6th assault on the Capitol. A House committee voted unanimously to refer the former president for prosecution on 4 criminal offenses, including insurrection. Democrat Representative Jamie Raskin of Maryland spoke at the committee meeting.
We propose to the committee advancing referrals where the gravity of the specific offense, the severity of its actual harm, and the centrality of the offender to the overall design of the unlawful scheme to overthrow the election compel us to speak. Ours is not a system of justice where foot soldiers go to jail and the masterminds and ringleaders get a free pass.
Everything just looks horrific. TRX, not too bad. Maybe push up a little bit higher. Again, not going to have a whole load in it. Yeah, I guess it's probably looking like to stay patient today. It's not ideal. RLC looks okay. Building on some nice structure here, as you can see. This is probably the best one. But again, relatively dangerous. But I do like how it's holding on to that 100. I'm kind of slightly ramping up, just not having volume on our side, so it does really make it dangerous. Could be the case that we get kind of a break and then a straight move back down. So break and then bam, straight back down. So
forward with deciding who their nominee is actually going to be. Other than that, it's really just going to be an impact in terms of the fact that these charges were even recommended and referred in the first place, as well as just everything the committee has rolled out. I mean, these have been highly choreographed hearings. There's really been a lot of thought and production value that's gone into it, all of it in the name of really convincing the average American individual that Trump had a very clear role in what we saw unfold on January 6th, and just how serious this was in terms of what his actions were and what the potential results could have been.
It will definitely be interesting to see in the years ahead how this impacts public opinion for those presidential elections. Emily, thank you very much. Emily Wilkins of Bloomberg Government in Washington. Now, Elon Musk says Twitter will restrict voting on major policy decisions to paying Twitter Blue subscribers. That comes just a day after a majority of the 17.5 million votes cast in a poll were in favor of Musk stepping down as CEO. Joining us now is Bloomberg Intelligence analyst Matt Flopsom. So, Matt, the poll spoke. Elon Musk said he'd abide by it. I mean, is this him backing away from it to some degree to say, oh, no, we only want paying members to have a voice?
Yeah, it's a good question. So obviously that announcement was made specifically around policy decisions. But yeah, there's this big question now about whether he's going to change the terms of reference for that poll about him staying on as CEO or not. To be honest, I think it's a bit of a sideshow because whether he's CEO or not, he's clearly going to be the guy making decisions.
There really isn't much. Very minimal amount of potential trades on the card today.
So I think that's not going to change his influence over the company.
Yeah, Matt, good morning. Does the market think that he's going to step down? I mean, how do we gauge that? There's no Twitter share price anymore. I guess the Tesla share price tends to be.
Yeah,
But yeah, guys, those that are joining us, welcome to the stream. Feel free to ask us anything in the chat. Those that are liking the stream, thank you very much. Very much appreciated.
proxy you've got to the sense about what's going on, and maybe suddenly the fact that it ended up not really moving very much tells you that there is the sense that whether he has the official title or not, he's still going to be very focused on what's happening at Twitter in the coming months and years.
Okay, thank you, Matt. Matt Block joining us there with the latest on Twitter from Bloomberg Intelligence, of course. Coming up on the programme, we're seeing a risk-off environment today. We're off earlier lows on stocks, but US futures flat to negative this morning, down by 0.3% on the Nasdaq futures, and we will talk about that with Maria Whiteman. This is the global impact of BOJ's move. State Street Global Markets Senior.
Yeah, so from brief turnaround and then see a push back up. Could see some nice price action on the breaker structure. In terms of altcoins moving higher, we have got some in the pipeline now, so yeah, we're going to keep an eye on it. Yeah, could potentially catch some trades very quickly just on this breakout. I don't see it pushing a hell of a lot more past this level here. A lot of orders, so yeah, maybe one or two more pushes and then just kind of fizzle out and then just drop. Yeah, that's what we're looking at. Okay, yeah, we're going to finish it up here. I mean, it's 20 past 10, so normally you don't really get too much price action happening between now. A lot of it just comes in closer to that New York Open, so we'll come back live on that New York Open. We've got some trades in the pipeline, or some potential trades in the pipeline, should I say. So, yeah, we'll see how things kind of develop. See on structure, potentially look at entering when prices come down to find support and start kind of ramping back up for a potential breakup here. And obviously keep an eye on the dollar index for it to make another move down. So if it starts making a move down here, then yeah, that's going to put a little bit of upward pressure on the crypto. So yeah, but everyone that's joined us, thank you very much for joining us. Come join us at 2 p.m. For that New York Open. There'll be a lot more price action in that Open, that's for sure. So, yeah, hopefully we can get a trade out for you guys in that session. But yeah, as always, thank you very much for joining. Have a lovely day. Cheers.